So let's look at the metals and mining ETF. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So here is metals and mining. Pretty substantial move here from the low, but we have seen a bit of a pullback. So let's have a look here. Okay. So this is the big picture, weekly data points. I did try to draw in some time cycles because it does move in cycles in the sense that we have these inhale, exhale, inhale, exhale, inhale, exhale, inhale, exhale. The issue is that the duration of these cycles have differed over time. Hence, you simply can't draw in these, very clean time cycles with this tool. They just simply have differed. But the point is, this ETF, this industry, it does have these boom and bust cycles within an overall bull market. So if we do measure some of the moves, like here as an example, you have a pretty significant, 200 plus move from the low. But from that high, you do have a rather astonishing, minus 65-ish% plunge, which definitively would be, the definition of boom and bust. The current situation is a bit messy. The PPO, the distance from the red 200-week moving average that we recently had is similar to what we have seen during previous cycle peaks, as you can see. Similarly, we did have an RSI that was also similar to previous major and also some smaller cycle peaks. However, even if we are going to go through, a substantial declining phase, then it is fully possible to have some rallies within. Something that is rather interesting is the potentiality here for symmetry, because this pattern right here, in the middle, this huge double bottom. So we have a monster double bottom, and we have this very substantial, bottoming pattern forming. And what is especially interesting here is the symmetry. If we do look here at this decline, it was 504 days. This current rally measured here to this point, which is early-ish. Well, let's get the exact. So the 26th of July, that would be the point where this rally has had the same duration that this pullback had. When we look at this rally here from the low, around 749-ish days to the peak, from the peak here to this low was 784 days. So basically you can see that there is this rather clear symmetry as of late. Given that we are in the very late part of this major rally, if we were to assume, so let's assume that similar to how we have this mirror effect here, we did have this rally leading up to this pullback. If the mirror effect is going to continue, then we could then have a pullback here that reflects, that sort of mirrors this rally. So this was around 434 days. We could project this one to 434 days as well. From this peak to this low, that was minus 27-ish%. I've measured in minus 27-ish% here, and that gets us to October 2022. If we were here to look at the seasonality for this ETF, you see here that over the last 10 years, June, July, August have been strong. When we look over the last 16 years, then it gets a bit more messy. It's basically like 50-50. But let's assume, that we're going to have something more similar to the last 10 years. Hence, there's going to be some seasonal strength here. And given that this pullback was 504-ish days, this rally could be overall 504-ish days. That does put, the rally, here towards late July, early August, which does fit here with the seasonality, the typical seasonality for XME. So it's something to consider. Of course, obviously, there's no guarantee that it is going to play out like this, but there's a possibility. The possibility is increased given that we recently bounced here from the purple 20-week moving average. If we go here to the daily data points, then we do see that the blue 100-day moving average plays the key role as support. So it has been solid support many times. Hence, the primary assumption is that it is going to function as support again. That is the weight of the evidence, especially when you take into account the context that seasonally the coming months tend to be strong. Also, we are emerging from a low RSI level that has triggered rallies ever since this low here back in 2020. So at least there is the expectation of a mean reversion rally. But let's explore further. So here we have Finviz. They do draw the trend lines. You do have a double top. We have fallen outside of this consolidation box. That is more longer term bearish. When we compare the S&P 500 with the XME, looking at price earnings, the XME is actually minus 47% below the S&P. The dividend is only 0.8%. So 0.8%, while for the S&P 500 it is 1.34%, which is significantly higher. Looking here at the holdings, here you can see the top. So there's only 26 here in the XME. So it is there's some diversification, but it is you do see that it is rather concentrated into some key names in the metal and mining space. And notwithstanding that, we do see actually that small and mid caps dominate, which is a bit unexpected. When you see these few holdings, you expect to see the vast majority be large caps. So this is interesting. Okay, so to sum up my take here for the XME, this one is a bit complicated because we did see this potentiality of a mirror effect so far ever since this pullback here. We have seen this mirror effect, wherein we quite clearly could draw in with these boxes that this pullback was mirrored by this rally. We saw that this rally was mirrored by this pullback. So that has been the primary behavior so far. So it makes sense to assume that there's an increased probability that it could continue, given that you did have. So the next mirror is basically this, which would mean that we would assume a pullback. So that is the bigger picture, likely development for the XME. Notwithstanding this long-term projection of price action, we do have support. We are emerging from an oversold level, hence there is a decent odds that we are going to have a bounce, which would be short-term bullish, even though the longer-term picture is more tilted in the direction that we are going to have more mean reversion. Though if you look even more longer term, the super long term picture would be bullish. So very long term, it's a bullish setup. Long term, there is reason to expect some further cool down. Then again, short term, we do have that support. So it goes to show you how you can get different theses based on time frame.